This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 9/9/2020, and this is show number 113. Well, Nick, hey, what goes down must go up, especially when you're dealing with the stock markets in modern America in 2020, right?
Oh, that's so true, Kerry. That's how things work around here. Stocks are gapping higher today after that nice big 3-day sell-off. This is typical, though. After a large decline in such a short period of time, you're going to get some kind of a rebound, especially when markets were coming off of all-time highs in the NASDAQ and the S&P 500. But there should be a lot of whipsaw and choppiness over the next couple of weeks, especially as we're into that election cycle window. We have about, I guess, less than 60 days now before the election, but right around that period. And again, you just never know what could happen. So it'll be more important than ever to read the charts over the next couple of months, and we'll see what these charts tell us. But right now, I think we still got to brace ourselves for some more choppiness going forward.
All right, and so volatility is really the byword. Does that mean the VIX is going up, or what's going to be with the VIX?
Yeah, the VIX has had its move, though, and it's been coming down now. So the VIX had a recent pop all the way up to around $38. Today, it's down around 28 and change. So it has already pulled back quite a bit with just today's rally in place. In fact, yesterday, the VIX made a lower high, even though the market made a new low. So that was pretty interesting and kind of telling that we were due for some kind of a short-term bounce. Wow.
So, yeah, you can tell a lot from that VIX, huh?
You can. You can tell a lot from a lot of different chart patterns that develop in the VIX. And that's an observation that everybody should, always learn and watch. But, anytime the VIX has a big spike, it's usually going to come down. But I think the VIX right now, I don't see it making new highs from where we were just a couple of days ago. But what I think can happen is it can still remain pretty choppy and somewhat in a range. So just be aware of that.
Well, it's been stuck in the over $20, $25 range now for months, Nick.
Yeah, the VIX since May has been fluctuating between the I guess around the low recently in August was 20, the recent high being around $38. Prior to that, it's been stuck between 35 and 25. So I think we're going to stay in this range for the foreseeable future.
Yeah, and that's telling us that volatility is going to stay up, huh?
Yeah, and I don't think it spikes to where we saw it back in March, but I think that you're going to stay somewhat in a range around that 20 to 28, 20 to 30, somewhere in there, and you'll get days where the markets rally and days where the markets sell off. But overall, this is a good time to be a short-term trader, and what I mean by that is a day trader or somebody that's in and out quickly for a few days to a week. So again, I'll shorten up my time horizons and a few things now going forward, just until this election plays itself out.
All right, cool. And so one thing you told us about is the SPYDRs, when they trade lower on high volume, like over 100 million shares in a day. That was your tip-off back in January and February. What are we seeing from the SPYDRs on the last go-around with the blowout we had the past couple of days?
Yeah, well, on September 3rd, the SPYDRs traded 148 million shares. And then on the following Friday, which was right before Labor Day, the SPYDRs traded 139 million. And then yesterday, they traded 114 million. So while we're bouncing today, the decline is not over yet. That tells me we still have more downside to go before this market can find a little bit more stability. So I know today's a nice bounce, but I like to call this a sucker's rally.
So this is like the dead cat bounce?
Yeah, not so much a dead cat bounce, because a dead cat bounce will occur when you're already in a downtrend. We're still theoretically in an uptrend on the bigger time frames, but I think it's just a sucker's bounce, sucker's rally right here. Get people to think that things are fine again, and we'll still remain choppy over the next few days. But remember, we had a very, very sharp sell-off in the S&P 500. We put a high in on the 2nd of September. That high was around 35.88. Yesterday, we put a low in the S&P at 33.29, and today we're bouncing back up to around 33.96. And we'll see where we go from here. But again, we have not satisfied the downside projections yet, so we still got a little bit more backing and filling to do. And with the election coming up in this window, I would not rule out some more choppiness and even volatility going forward.
Interesting. So semiconductor sell-off's been pretty intense, hasn't it?
It has been very, very intense. In fact, that's one of my leading indicators is the semiconductors. I look at the SMH, or the Philadelphia Semiconductor Index, which is called the SOX. And today the SOX is bouncing up really, really nicely, up about 3%. But it's had a big, big sell-off. And the semiconductors actually closed, the SMH closed below the 50-day moving average yesterday. And that's the first time that's happened really since April 21st. So again, you always got to be careful when the semis roll over. Now, with that being said, there's a lot of support around that 50-day moving average, or even just a little bit below it. So I think we'll be watching some key levels there. I'll be updating all my members nightly on what the semiconductors are telling us and what they're doing each and every day, because there's semiconductors in everything that we use. I mean, it's probably the most important industry group that every trader and investor should follow.
Yeah, and it's certainly a leading indicator as well.
Without a doubt. And again, you want to pay attention to the semiconductors. They came off of an all-time high with volume, and that's the market's way of talking to you.
All right. Hey, so finally, at least recently, no show would be complete without at least some tribute to gold and silver. They started out down yesterday, upside reversal, came back down, but still finished, at least gold finished in the black. Today, last night they were getting slammed again, and today they've done an upside reversal.
Yeah, gold is like the Weeble Wobbles. They get knocked over, but they don't fall down. And if you take a look at, gold futures today, up 11 points. So it really is just doing a lot of backing and filling. I'd like to see one more minor leg down. That would satisfy me or my pattern for a nice upside move in the future. But again, very, very range bound, working off the overbought condition that took place on a monthly chart. And if you're bullish gold, this is exactly what you want to see. You don't want to see a parabolic move. You want to see it work off that overbought condition, and then it'll set up for another massive advance to the upside.
Yeah, and it seems definitely to be doing that. The one thing we notice is start getting close to 2,000. That's resistance now, right?
Yeah, it's some resistance. It's not major. The major resistance level will still be the high that was put in on the 7th. That was around 2089. But yeah, 2,000 level seems to be resistance. You got some lower highs going on the daily chart. That tells us we should have one more down leg. Not a big down leg either. Maybe somewhere around 1850, 1860, somewhere down there. If it overshoots 18 and a quarter, and then you start looking at gold again on the long side.
Yeah, what if it doesn't go to 1860 and it stays pretty close to where it is now?
That's fine too. It'll just need to do a little bit more consolidation, and you can see that on a bigger time frame. So if you're looking at, say, a monthly or a weekly chart, you could put that pattern together too. And I would almost prefer that, because using time patterns like I do, that would make it easier for me to tell when the next move is going to take off.
All right. Well, that's really interesting, and the strength that it shows, the fact that whatever the cause of these major volatile movements in gold, movements that you don't usually see or haven't seen in quite a while, not since its last major up move, 2011, but you see these upside reversals all the time. They're happening. Sometimes they happen multiple times in a day, which means if somebody is trying to make it go lower, it's just not working.
Yeah, and this is, what we said back in late July and early August when gold was really soaring. We said they're going to need to shake out the weak hands. But the hands here don't look that weak. So again, I love what it's doing, and we just need to do a little bit more of it.
All right. And I think we will conclude with that. Just keep your eyes on the precious metal sector, especially platinum. I wanted you to just take a quick look at the platinum chart. Tell me what you're seeing there.
Yeah, let me just get that symbol up here because that's a little bit, I don't track it all that closely. Really, gold and silver are my little go-tos. But let's take a look here at platinum.
It's been in normally it would trade higher than gold. It's been trading at less than 50% of gold. Palladium has gone through the roof, but platinum is in the dumps. There's some fundamental reasons, obviously, but my gut feel is it's getting close to the point where it's going to make a major move.
Well, I mean, right now you're looking at all precious metals that are very, very strong. I'm just waiting for this chart to load up here, so just give me one moment. Yeah, platinum, it's very similar, but today you're having a pretty good day. So now this is telling us that a little bit more work, and this will probably coattail gold. But I'd like to look at this a little bit closer, and we'll see what it gives us. But overall, it's not a bad setup either.
Yeah, I mean, if you buy the premise that today's millennial investor generation, they're just learning about gold and silver. Most of you millennials out there probably don't even know what platinum is. Probably think it's a paint color for a car, or they have the platinum card or whatever, the American Express card. But you're probably not really following platinum very closely, don't know anything about it. But it's much rarer than gold. The demand, of course, is a lot less. The market is puny, like nothing. It mostly comes from Russia and South Africa and a few other minor players. But it's been in the dumps here for years now. And it just seems to me it's going to hit its stride here.
Yeah, if you just look at the chart, what I'm seeing is that it has major, major overhead right now. So it just needs more consolidation. And if it can give you that pattern, this will take a little bit more time than gold. But again, same type of setup.
All right. Well, I think we'll leave it at that and take a look at Nick's site, and that'll show you his up-to-the-date, up-to-the-minute trading record in themoneystocks.com, Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Email us questions, comments, kl@kerrylutz.com. And Nick, we pick up tomorrow.
Sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.